Welcome, everyone. I'm Angelo Robles, host of the Angelo Robles podcast. I'm also the founder and CEO at Family Office Association. Today's session, and I've not done something like this during our new digital era. This is really special. Father and son collaborating on new investment themes and opportunities originated by the young next gen. It features Frohman Anderson II and Frohman Anderson III. Frohman, welcome to the show.
Hello, Angelo.
Thank you, Angelo.
Well, this is really exciting. I mean, Frohman II, I've known for probably about 7 or 8 years. He's always so bright and thoughtful, wonderful investor, and really looking at it from even a lens of impact as well. It's the first time I'm meeting Frohman III, but I've heard a little bit about him in the background for about a month or two now, and just was so impressed by their story. I'm like, there's no motivation for them to do it. I'm going to ask them, but why are they going to want to even come on? But Frohman and Frohman, second and third, are just so wanting to be beneficial to family offices, to father and sons, to families, to looking at engaging the next generation. Because I'm telling you, I'm seeing it in my 18-year-old. They have a different way of thinking and ideas that could be very, very valuable. Investing just happens to be one aspect of it, but I think it goes much deeper than that. And the hierarchy of, top down and elder and respect, and I understand it, it has value, but you really want to, both sides want to be active listeners and lifelong learners. So on that note, Frohman, the second, I think it would help a little bit even if it's just a minute, if you could give a little bit of your background and talk a little bit from that perspective so people have a framework of our discussion.
Sure, just very quickly, I spent the first 20 years in operating roles in various types of sectors, including manufacturing, a little bit of info tech, but nothing really financial until I joined a buyout firm. Shortly after that, within 2 or 3 years, started talking to my broader family and saying, why don't we do some of this for ourselves? Why don't we start a private equity fund? We got that approval and quickly formed an entity, but pretty much added the gamut of wealth management and family office responsibilities. So, the trust and estate, et cetera, multi-asset class. So we've grown this family office for about 15 years, the last 15 years, gradually to where we've taken more and more control in-house. And along the way, my wife, who's an entrepreneur, and both my children, Frohman here, and his sister, have always been involved in private businesses. And that's what I think we'll talk about to a great extent the rest of this hour. And then how Frohman has forged his career path, but then how, our generation has really been able to leverage the next generation. So rather than tell them how it works and what to do, we've really seen amazing trends and ideas become highlighted and brought to our attention that honestly, our heads were down. We were doing the normal, usual stuff, being busy with the family office and everything else, but not necessarily watching the broader world and taking the dives into these areas of opportunity.
Excellent, Frohman, that's great. And Frohman III, tell us a little bit about yourself.
Sure. I was fortunate to participate at a young age in a startup alongside my sister and my mother. Really started when my sister was 14, I was 16. And that really came out of my sister's passion around the harmful chemicals that are in our everyday products, from our deodorant to our toothpaste to makeup, house cleaning products. And that was a business that my sister and my mother started. And it was amazing to participate in that and watch that grow. We utilized a direct-to-consumer model. And I took away so much from that experience early on. And when I went to college, I went to a liberal arts school, was interested in business, sort of bolstering my capacities as an entrepreneur. But what I found was not a lot of business courses at Dartmouth, where I attended undergrad. And it forced me to look at other subjects. And I think through some fortuitous circumstances, I ended up in the environmental studies department, getting a major in environmental sciences. And I think at the time, we had the business we were working on, which when we started, we didn't realize it was a social business. It just seemed, or a social enterprise, it just seemed like a good solution to a societal problem that mattered to us. But I was able to start to combine what I was learning in school about our climate, the future of our species and the challenges that we're facing, alongside what I was learning with the business that we were growing and operating. When I left Dartmouth with that degree in environmental sciences, we ran the business for another 18 months before exiting it. And that really left me a little bit with a hole in my career. Here I was, somewhat of a generalist, real concerns about our future, the sustainability of our species, and some of the climate challenges that we were facing, but not really sure how to engage on those different subjects and where I wanted to focus my career. So that's when I started to learn about impact investing more broadly, really piqued my interest. And I guess everything pretty much snowballed from there. I was able to participate in an impact investment educational program at the Harvard Kennedy School that now partners with the Zurich Institute for Sustainable Finance. I just really was able to learn through that program what it takes to manage a portfolio, execute impact investments and ESG mandates across asset classes, and really develop, I would say, just the vocabulary to start to engage with my family and what they were doing within the family office. I would say on top of all that, I was an impatient young person looking to have impact and start, I would say, creating a change where I could. And so I made some early investments of my own. I took my lawn mowing money from high school, opened up an E-Trade account, and started investing in companies that I thought were impactful. Around 2013, I took all of the investments and put it into Tesla. And the last 8 years has been quite a wild ride. I view that largely as an educational opportunity that I'm happy to share about, but it's also certainly been a profitable endeavor and has formed a lot of my investment thesis over the past 8 years, watching that company grow. As a family, what we've been able to learn from all this as we start to try and incorporate impact investing is we founded a sort of a carve out with Everhope Capital. And Everhope's capital's main focus is investments in alternative proteins. We thought that was a great way for our family to start to get exposure to impact investing rather than including the broader family, the family office, different asset classes. We said, let's just start getting our feet wet. Let's gain some domain expertise in one area to try and de-risk, but also have higher impact. And the area that became most obvious to us based on my research and our shared interests was alternative proteins. I'm happy to get into that a little bit more, but I just want to share a little bit of background and what we're up to and how we got there.
Wow, that's fantastic. Very interested in the alternative proteins. And really, ironically, this was not planned. I mentioned about a year ago in Miami that we had a father and daughter, and I interviewed them live on stage. That was back in the day, pre-COVID. And guess what? One of the things they do in Puerto Rico, where they moved from Florida for a variety of business and other reasons, is a cricket farm for protein. Really ironic. So I'm going to have lots of questions about how you form an investment thesis, about Tesla, about why you believe so much in being concentrated. But I would love to ask Frohman the second a question. So tell me, Frohman, when your son and daughter approach you relative from at that young age about sustainability and climate change, you were probably, I'm assuming, more of a traditional investor. Did you look at this cross-eyed? How did you keep an open mind?
Oh, for sure. There was a somewhat of a deer in the headlights. This is too big to digest for any one person in any reasonable period of time. I mean, it had all these kind of psychological reactions, but our kids are pretty tough on us, and they held our feet to the fire, and they said, "I don't want presents for Christmas. I want you to watch these half a dozen documentaries." So my wife and I sort of eventually within weeks, months, did that, and we got it at that point. It's sort of you can't continue to be indifferent and pretend not to know. You know, the knowledge is there. You can't unknow what you see once you take a little dive into these topics. So.
And did that give you as you got more educated in it and open-minded in it, and I'm assuming, and I'm putting these words in your mouth, that one, yeah, there's a philanthropic and a societal benefit, but if you're investing, you want to earn profits as well. You're in it to be successful, so you could give more money to philanthropy and have more opportunity to make an impact. Did this change your perspective for assessing risk?
Yeah, so the two bullets around ESG in particular, because there's a lot of thought like it's concessionary returns, et cetera. It's really two bullets. One is it's better risk management because this is really just more information. Like, why wouldn't you want more information about a public company or private company? So instead of just looking at traditional dimensions and metrics like financial reports, you want to extend your analysis deeper and further into the future. So that's really what the ESG and impact framework is. So that's risk. Everybody says, risk management, great. That's traditional investing. Let's do it better. So that's an easy conversation these days. On the return side, that's where the skepticism is that, oh, it must be concessionary returns. Well, honestly, it's really about not missing great investment opportunities. I mean, the classic example for our family office was they were just going down the very traditional energy investment road for quite a few years, had a traditional energy analyst on the team and so on. And, there wasn't going to be much of a conversation at that point a few years ago across the family about climate. But what I was able to do because of the work I did with Frohman and what Frohman brought to us is I was able to expose the family office to the opportunities in clean energy and clean power. And within about a year of doing a project and a dive in that area, we found a great fund to invest in. And we steered a lot of capital away from traditional energy and into that fund. And so I think that was all because of the upside, the completely different set of future opportunities in something like clean power versus traditional energy. So I think that it's about looking where the puck's going. It's about considering what the future scenarios will be, which innovations, which technologies, how much change will you get in systems like our energy and power and transportation systems. And it's very easy to get caught up in the rearview mirror and project forward and extrapolate from the past 10, 20, 50 years. But this isn't what the next generation is doing. So once we got, kicked in the ass by our kids, we started really looking forward, really started focusing in some very exciting areas of opportunity. And that's what I've been doing for a lot of my last 5 years is letting a lot of the staff at the family office do their thing, doing some great traditional investing in, growthy managers and things like that. But I've been off doing a lot of deeper dives in areas that perhaps are earlier, more nascent. Sometimes it's really an early stage private equity type of opportunity, but, sooner or later, there'll be some public and more public opportunities to express these very long-term themes that are sure to come and sure to scale.
Excellent. And Frohman III, so you mentioned what you and your sister creating and forming a company, eliminating chemicals from personal care and household products. I mean, it's a great age. You want to start young. You want to hopefully have some level of mentorship. You also are going to make mistakes, but luckily you're not loaded with obligations, a mortgage and other things. So it's like the perfect time, whether it was a side hustle relative to school, it doesn't matter. That's great. Highly recommended. What were some of the takeaways that you learned, if you had to rank them as 1, 2, or 3 in terms of knowing the life of an entrepreneur and often how challenging and hard it is?
Oh, wow. Well, I think in a sense that is the biggest takeaway, just really how difficult it is to manifest an idea and scale that idea and find a product market fit and create a product that people want or a service. And that's all hours of the day, 24/7. And, You got to get really comfortable with failure. It's a cliche, but really every day is failure after another. And how can I fail less and get to where we're going? And you know what? You just learn so quickly when you find yourself in that sort of environment. What works, what doesn't, working with people, working with products, you know, all these just customer service, like how to keep your customers happy, how to engage with your customer base, figure out what they want, try and offer that. There were countless lessons to be learned, but I think really one of the biggest ones is how large the opportunities for failure are with a company. Ultimately, near the end of our business, we had some real struggles, mostly because we were deceived by some third-party manufacturers that we had enlisted, and really in a lot of ways affected the future of our business. And for me personally, that's one of the largest lessons I took away is just trying to find where the holes are, both in a business I'm involved in or any investment I'm looking at, like where are the holes, where are the risks, because they're very real, and that can be people breaching contracts, even illegal activity. So it was hard lessons, but I think it gave me a sense of rigor when I'm looking at businesses.
Yeah, that's fantastic. And when you're young and doing something on a shoestring budget and it's a product that you're not self-manufacturing, that creates another layer of complexity. And again, there are some people that are not going to be as ethical or as prompt. And then that affects your brand relative to what you're outputting. So those were lessons that, yeah, some people could say you can learn that in business and finance in college. It's not the same hearing it from a professor and reading it in a book to enjoying the highs of being an entrepreneur and getting your ass kicked, which is really what a combination of any entrepreneur is going to have to go through. So let's go back a little bit to what you said before, because obviously that got attention. You're young, you're a teenager, and you decide to put your, what I call your side hustle money into, at least then, one specific company that happened to be Tesla. How did you make that decision? Was it luck? Did you actually have a thesis? Was it something about Elon Musk, the company? What made you decide to do it?
Absolutely. Well, I'll tell you a little bit of where I was in my frame of mind at the time. I was about a junior, I think, in college, 2013. And I was in the midst of an investment banking internship in Philadelphia, working the crazy hours as one does in that position. And I was just feeling a huge contrast between what was becoming important to me, what I was learning in school, the issues of our world and what was mattering to me, and then what I found myself working on for long hours each day, trying to figure out for some client somewhere what sports bar franchise they should try and purchase. There just seemed to be this huge divergence for me between what I saw the world of business focusing on and where I found myself caring and wanting to focus on. And so I remember the person who told me about Elon Musk at the time. And I said, that sounds like a really interesting individual working on electric cars, working on rockets. Sounds kind of crazy, but I should look into it. And I remember putting a Google tracker on the terms Elon Musk and Tesla at the time. How you can put those phrases on Google, and anytime anything's published or written online, you'll get a notification. Around that time, that was only popping up about once a week. There was, a new article or some new information out there about these companies, Tesla and Elon Musk. And really it was for me learning about the individual, I guess you could call it the jockey, right? Because to me, electric cars were so new and so risky, and similarly the rockets he was working on at SpaceX. But really for me, it became the individual, seeing what he had accomplished to that point in his career, and the first principle sort of perspective he was taking on the technological futures he was trying to create is one that just resonated with me really strongly. And I think because of that, that way I was feeling at that internship every day, not finding that sort of purpose I was hoping for, I looked at it as, okay, I'm going to put all my money in this. It's going to make sure that I really follow this. It's going to be a great educational opportunity. And this is somebody I really believe in. So I think I was willing to, at that time, take that minimal risk to sort of be able to be engaged in that sort of way. So I had ideas of what the company could be at that time. I had ideas about technology and electrification and Elon himself. But that was certainly a thesis that I grew into over time as I was able to observe the company execute and shift. But one thing that's fascinating is from the very first day I invested, they had their master plan, right? They had that 7-8 year plan of product roadmap and exactly what they were going to accomplish and when. So it wasn't some big secret about how they were going to get to a mass market vehicle and what their plan was. And to me, that made it very easy to, over time, as I learned about the company, as I learned about the team, be able to check back and say, okay, well, where are they in terms of what they said they were going to accomplish? And so for me, it was a great place to start and a great educational opportunity to follow something every single day for the last 8 years.
Well, this is a really important question then for Frohman II. With what your son just said about Tesla, early on, he believes in a climate change and an impact and the vision, the energy that an Elon has. But you must have looked at it. I mean, you must last year, the year before that, and said, I mean, I grew up on traditional investing, the PE ratios and all the metrics. I don't know if they really make sense. Why don't we get out now while we have a gain that we have? How did you get educated to change your mind? Now it's your son's decision on his money, but you must have questioned it a little bit, just like giant hedge fund managers have, and they gotten their butts kicked.
Yeah, well, for sure. I saw the times when the news wasn't so positive about Tesla, and the thought would enter my brain either in the front or the back and say, is this company going to make it or crash and burn? So I mean, because I wasn't staying close to it like my son was, I had those natural sort of fears and questions that a casual observer would have based just on media, just on headlines. So the mistake I made, first of all, I'd not spent almost any time whatsoever on individual equity research as I was building a family office, because we really allocate to managers. So it's kind of a lame excuse. But my wife took our 401k money and invested it in Tesla about 3 years ago, thank goodness. And then we added more last year. And so we were very late to the party, but we only came to the party 100% because of Frohman's, research and his beliefs. So, I mean, his parents were no different than most people. They were maybe not believers for a very long time, or not willing to, put in the time and the focus like he was. He was kind of like the guy in the skunk works, just constantly focused on Tesla for years and years. We just weren't willing to go there.
Now, I think this is a key question. You said that you invest through managers, so I'm assuming that includes long short managers and hedge funds.
Mm-hmm.
I believe you told me a story, hopefully I'm telling it correctly, that I believe you brought your son to a meeting, and it was something came up relative to Tesla where the manager was quote unquote bearish, and your son had questions that it wasn't so easy for that manager to answer in a way that they probably should.
You're putting it politely, really, because what happened was I set up a meeting purposely between one of our top 2 growth managers. And, they have a cadre of about 45 analysts, and I have a lot of respect for them. And so, I put it to them. I said, what's your coverage been of Tesla over the, however many years? And the answer was sort of like, well, we've looked at it 3 times, and it's been several analysts. So, I said to myself, well, I really, because my son has so much of his net worth, which is greatly increased in Tesla, I want to make sure that he's availing himself of all the resources I have access to. So I believe that was the impetus of me connecting Frohman with the lead analyst from this large asset management company. And what happened isn't really surprising in retrospect, which is this analyst didn't do the work my son did. This analyst and a few colleagues had taken a look at it, quote unquote, a few times, but they honestly really didn't understand the dynamics that are at play and that are going to drive the entire, the revolution of the entire auto industry. And so they were still clinging to some sort of old fears and unfounded sort of risk factors and concerns. They didn't really understand the differential of technology and the technology gap that Tesla has built, and the speed of innovation that is in their DNA. Like, they didn't understand these things. So it was honestly like a case of, an older, more experienced analyst embarrassing themselves because they couldn't really, they couldn't put forth any credible defenses to some of the points we were very politely bringing up.
And Frohman III, I'm going to ask you a personal question. If you elect not to answer it, I completely understand. What kind of return, approximately, obviously as a multiple, have you gotten on your Tesla investment, especially your first one?
Yeah, it's over 100x. I think
Wow.
the IRR is something like in the 70s. So, but what I'll say, Angelo, is when I got started, that was just an idea. That was like an educational experiment for me, quite frankly. The dollars weren't all that much. The downside wasn't all that much. As it started to grow, that changes, right?
Oh, yeah.
And in 2018, I found myself in a position where it was still it started to become something meaningful, but the stock had traded sideways for about 5 years while the company continued to execute and de-risk and just perform exactly how they said that they would. And I was learning a lot about investing that whole time and trying to understand the bear and the bull argument and poke holes in everything the way I had to learn to with my own business. And there were a couple quotes I remember that around that time. I had who's now my partner over at Unovis, where I do the private equity. He said, diversification preserves wealth, concentration grows wealth. And that was at a time where I was thinking, oh, should I be diversifying out of Tesla? But it really made me think about actually allocating more and taking an increased concentrated position, because I was at a point in my life where I could take on that risk. I was looking to build wealth, and I looked around in my life and didn't find any better opportunities. I looked at the research I had been doing, and every single day I was underwriting that investment, right? Every single day you have to re-underwrite your investments. And I looked at the analysis being done out there on Wall Street by analysts, and I was very comfortable that I could have gone toe to toe with any single one of them at that point and had a better understanding of where that company was headed. So it was a leap of faith in myself to say, I actually have an information advantage on this one. Like, I actually know this better than anybody else, because everybody else is getting caught up in the window dressing, and they say they're looking at the fundamentals, but they're really, really not. And at that time, the stock was the highest shorted stock on Wall Street. So there was plenty of people saying I was wrong, that company was going to zero, which I also found just laughable, because there's value in that company even if they didn't succeed. Like, somebody would have scooped up and bought them. So the idea they were going to zero was always pretty silly to me. But so it was around that time, the summer of 2018, where I actually doubled my investment in Tesla. And about a week later, Larry Ellison put in his $1 billion. And since then the rest is history. And it's been just fascinating the way to see the way the rhetoric and the story has changed around that company. I was banging the table for years saying, this is not an auto company, this is a technology company. And they will not follow traditional auto margins. They will have software-like margins and all these sorts of things that people just did not want to hear or understand. And I think anybody really looking at the company always saw that as a probability. Now, I couldn't have told you the stock would have done what it did in the last year. Nobody could. But the reality is, you could just see where the technology was going if they continue to execute exactly how they had the whole time. And And, when you have these 10, 15, 20-year timeframes that you can, have that level of outlook, you just sit and you ride it.
And what would cause you to change your mind and perhaps completely exit?
Yeah, I think if Elon were to leave the company, I think, or something were to happen to Elon, there's certainly like a key person risk there. When people ask me what's the biggest risk around Tesla, that's the one I identify. But at the same time, I wouldn't really want to be involved in any sort of growth company that doesn't have a key person risk. I think having somebody like Elon is like the most amazing thing about that business. So it's a double-edged sword with that. I think there's regulatory questions. If they start to not execute on some of the technological goals that they've set for themselves, or those timelines start to get really pushed out, that would certainly make me start to reconsider things. But I think that might just be diversifying some from what I had had, not any cause to exit entirely.
What I find so consistent about the younger generation that is interested in making an impact is they tend to be, and like you said, wealth through concentration. But I grew up, I'm like probably around your dad's age, that yeah, but diversity, that helps to mitigate risk. And you would think on the surface that's true, yet it's so consistent. I heard it from so many next gen family members and family offices. They tend to be very, very concentrated. But I guess you watch that basket very, very closely. That's the converse to it. So you are, if it's liquid, you're able to get out quickly for the most part. But do you have any reason why you elect to be concentrated? Is it simply easier to closely follow 2, 10, 15 positions than hundreds? I guess that's part of it.
Well, frankly, that's the case. I mean, I could probably only follow 1 to maybe 3 companies. I think to the level of depth I need to think that I have an information advantage over Wall Street or fund managers or anybody else. If I'm looking to diversify, I might do another investment or 2. But then if I'm looking to diversify further, I'm just going to hand that off to people likely, because I don't have the time or bandwidth to create that to follow a company, I think, to the level I need to say, I know this better than the analysts, than the people who are putting the price targets on the stock. That's where I really want to be with a company if I'm going to be investing in it.
That's great advice. And taking it back to Frohman II, now you've been more active in private, so you're probably more comfortable than most being concentrated. And again, you must have looked at that with your son, Tesla, and we'll get to Bitcoin and crypto shortly. Shouldn't you diversify a little bit? Shouldn't you take some profits off the table? What did you teach him, and maybe he taught you about investing?
Well, I certainly mentioned it a time or two, because that's when I wasn't, deeply knowledgeable about Tesla, and I could only see, sort of the superficial headlines, and I knew that he was highly concentrated, and I knew that he'd had tremendous gains. And so, the obvious thing would be, shouldn't you take some chips off the table and put it somewhere else? But, kudos to him for saying, look, I really know this investment, and I see a lot of upside, and I understand the risks. And so he stuck with his concentration.
And just a little bit of a note, I believe your daughter, Ava, she also built a business to educate the public and succeeding in scaling a big movement. So obviously you've done something right. I'm a parent. There's parents out there. Give us a tip, Frohman. Why? How has it worked out so well?
Well, we get a little credit. I think there's a bit of osmosis where, both our kids saw both their parents pretty, up to their elbows in private businesses. And so maybe they picked something up from that. So there was sort of the option was there in their minds. I think in my daughter's case, she was so young, she really identified a problem, and she got very deeply knowledgeable about this problem of chemicals. If we literally told this set of information to 100 people, not one person understood the level to which there was no regulation, no protection of the consumer, and how ubiquitous how many chemicals were in dozens and hundreds of products. And so this is just something that was kind of invisible to people. And so she got all over that. And so she gets credit with identifying the problem. In terms of the business, I mean, we helped her, but we thought it was going to be a little small, lifestyle kind of thing where we create a few products and figure out how to sell them. And then, because of the business model that was chosen, it scaled at about 200% a year. We reached over 1 million households, and, it got to a level of about 50 million in sales within 5-6 years from scratch. So, what we found again was that there was an enormous demand for the information and knowledge that we had. So we really felt we were in the knowledge business, and we were able to educate people because we were not selling it through traditional retail channels. Instead, we were literally meeting with people via home demonstration, which is a business model our family had known since the 40s. Mm-hmm. And so I think the story there is that, my wife and I helped our daughter, obviously, with, scaling a business, but she always was leading the product development, the PR, the science of the health issues. That was all my daughter. So she played a major role. She was CEO of the company, but she was going to school in high school and then college. And so, wow. It was a team effort, but I think she got all the credit for wanting to do something and then doing it.
I'll just chime in, Angelo, and just also say, I feel very fortunate. My parents in large, even though it takes them a little bit sometimes, have been very supportive in so many different ways. I mean, when I was 13, that was when my dad helped me open up my E-Trade account. If he hadn't started with me at that age, looking at things and getting me comfortable with that, I never would have been in a position to make that first investment in Tesla when that opportunity came along. So I think in many ways, I feel very lucky that our parents have just been so supportive of my sister and my curiosities and exploring, are there business opportunities? Are there investments opportunities around these curiosities? And then in part, we've been able to take those and share them with our parents. So
great. That's very helpful. We have a couple of core topics I still want to cover. Let's talk a little bit about the investment in your interest, Frohman III, in protein alternatives. Tell us more.
Yeah, so when after we sold the business in 2015, I was looking to get into impact investing, trying to figure out the best way to do it. And I was new to venture. I had my entrepreneurship experience, but the whole idea of investing directly in startups, I thought I could bring some value. But the whole idea of creating term sheets, looking at convertible notes, like that was all new to me. So I sort of pitched to the family, hey, if we're going to start to do this, let's try and keep really focused. Let's try and find a segment that we're very interested in, that I can gain some sort of domain expertise, and try and at least de-risk some of the early stage impact investments we were looking to do. And just on a personal level at the time, I had gone vegan for personal choices, actually got my family to join in more plant-based eating and going vegan. And as I was looking at that space as just like a hungry vegan, I started to come across what I thought were really interesting food technologies, the Beyond Meats and the Impossible Foods of the world, and started to dig into a little bit more of those and leverage what I had learned in my environmental sciences undergrad. So when we were looking at what spaces we were focusing on, I had sort of like that personal interest growing in that space. But also when I went back to this idea of what's going to be most additional, we only have so many dollars, we only have so much time and energy to allot to one sort of problem area or one thematic focus. What is that going to be? I wanted it to be the most additional. And so when I went back to my environmental sciences degree, trying to figure out what opportunities were there, we dabbled a little bit in renewable energies and other things like that, but it quickly became clear there's institutional players in that, pension funds, governments investing in that sort of infrastructure. Like our time and resources weren't going to make a huge dent at that point in that space. So what was that going to be? And I kept coming back to the issue of food, and more specifically, our production of protein and the massive externalities that has on our environment, and biodiversity, on public health, whether that's heart disease and diabetes or zoonotic borne illnesses and antibiotic resistance, and then ultimately animal welfare and just the entire ethical question around that. So it became really interesting to me because here was a sort of problem in growing animals for food that seemed to have wide sweeping negative impacts on our society and our environment. And I was also at the same time seeing some technological solutions to that. The idea that we could actually take plants and create meat out of that, or take cells, ferment them in a bioreactor, and make actual meat just without ever having raised and slaughtered an animal, were just two very compelling ideas to me. So I started to look at it, and it became increasingly clear that these weren't just going to be very successful trends, but actual technological inevitabilities. And it was exactly what I was seeing in Tesla. So without a doubt, electric vehicles are going to take over the transportation industry because they're cheaper to run, they have less moving parts, the energy input is cheaper, and that's where we're heading. So there's these technological advantages that the electric drivetrain has over the internal combustion drivetrain, which is why it's just an inevitability that we're going to get there. I can't predict when and exact rates, but it's an inevitability. And I was seeing the same thing in food. It takes 20 pounds of grain into a cow to get 1 pound of beef. That's an incredibly inefficient production model, right? So if you can take that same grain and instead get 20 pounds of plant-based meat out the other side, that just from a physics perspective, like that's a largely more efficient model. So you need less land, less water, less animals, less pollution, less everything going in. Now, the real question is, can we make those products to where they'll actually start to compete in the marketplace? And that's where I got sold was, yeah, everybody had that first veggie burger or that Beyond Meat burger 1.0. And it has room for improvement. But today in blind taste tests, already some of these products are starting to match up or outcompete their counterparts. And that's where I think we're headed, which is tremendously exciting to me, is that these alternative proteins, the Beyond Burgers, the Impossible Burgers, plant-based fish, whatever the product is, chicken nugget that you like, we're not beholden to the biology of an animal. So we can actually make something that tastes better, performs better, looks better, is cheaper because the inputs are less, and it doesn't affect our environment, and it doesn't affect animals, and it doesn't affect, and it's better for human health, and. So you've got an example of a technology that is just fundamentally better in every way, and that's where we're headed. So that's why I view the alternative protein space as a technological inevitability. Right now, it's an adoption thing, and people are still just seeing these products for the first time. We're getting our first wave of serious R&D dollars going into these technologies, and we're starting to see some compelling products really come out and get traction in the marketplace. But when you can make something that costs less, performs better, and is easier and more accessible, those are the three main drivers of consumer choices in the food marketplace. And we will be able to outcompete on every single one of those. So then you're looking at a $2 trillion global meat market that's growing to $4 trillion. And right now it's only 1% of the global marketplace. So the economic and impact potential is just massive for that technology.
Well, I mean, two comments. One, I haven't had lunch, and you're absolutely making me hungry. Beyond Meat Impossible Burger shocked me when I first had it, and I do enjoy meat. I'm not going to say it was as good, but it was pretty close.
Yeah.
Its look, its texture, its taste, and again, that's bound to likely only get better. My second comment, when I mentioned what the father and daughter on alternative protein in Puerto Rico, they brought some cricket like chips with salt. The Beyond Burger and what you're talking about tasted better than a dried cricket with salt, although it's a great protein profile.
Yeah, I'll just make a quick comment on the insect proteins. We're actually not quite so bullish on those because we just feel like they don't actually have any technological advantage to using plants or animal cells. And why would somebody have a cricket burger over a lentil burger that tastes like beef or actual beef just made from cells? So in the marketplace, we don't actually see necessarily a long-term future for the insect proteins. We see that more being used as a feed input for livestock, which again, we view as an outdated technology. So.
Well, I think everyone knew this one was coming. We're going to start with Frohman the third and then weave in Frohman the second. Bitcoin, cryptocurrencies, of course. Something, I think you and your dad listened to the interview I did with Raoul Paul. That's when Frohman had a chance to reach out. And, Raoul, a legendary macro, this is the greatest asymmetrical trade that he's ever seen. You're young. When did you first become familiar with Bitcoin? And again, the statistics prove it. Those that are my age and older, it's like 3% adoption. Those like under 35, like it was like 41%. It's such a big difference. Unfortunately, it's life. Age does play a part in it, but it's not too late. But tell us a little bit about your earlier experiences. And then I'm assuming like Tesla, you put your thesis behind it, you did your research, and you made a decision.
Yeah, so a little bit different in this way, but so I first got exposed to the cryptocurrencies in 2016 and 17, saw some friends dabbling. And in 2017, when everything was running up, I opened up a Coinbase wallet, put a few $1,000s in just to see what all the fuss was about, and started to learn about the blockchain underlying technology and what these sort of crypto assets were. And I found it very compelling, but I thought there were too many risks, there were too many unknowns, be that regulatory, be that, I think, so I held for a little bit and then sold and didn't really make much money. But one of the reasons I actually chose at the time to get out of Bitcoin was this question about the energy consumption of the technology. And I kind of viewed that at the time as a critical barrier to the technology scaling. I saw where our planet and where our world was going and said, I think that there's going to be some sort of regulatory resistance to this technology just because of the energy consumption. So when I actually decided to get out of Bitcoin after only being in it for about 6 months, I actually felt okay about that. And I still do, because I had pretty clear reasons of why I wanted to get out of it. I felt like I really couldn't follow it every day like I wanted to, like I was committed to doing with Tesla. And I just thought there were too many outstanding questions. I think my big mistake, though, after I exited Bitcoin, was not more periodically continuing to research and see how that thesis I had to both get in and out at that time was evolving, or how the parameters around those ideas were evolving. So what happened, a few months ago was you start to see the headlines. Bitcoin goes past 10,000, right? And then it goes past 15,000, then it's reaching 20,000. And I went back and sort of reassessed the reasons why I had gotten out of Bitcoin and cryptocurrencies, and realized a lot of the questions and reasons I had to not be in that asset class were no longer valid reasons. There was far more regulatory clarity. There was far more robustness and trials, that the network had faced and survived. There were institutional dollars starting to come into the space, which was just not the case in 2017. And there were starting to be those on-roads, or they call them on-ramps, right, into crypto assets for institutions that had not previously existed. And frankly, for me, YouTube is one of the best educational resources. Angelo, I was able to come across your interview. I was able to come across Raoul's channel and see some of the, really quickly start to see some of the leading minds in the space. The head of Fidelity Digital Assets, an hour-long interview with that gentleman, an hour-long interview with you and Raoul, and realize, wow, a lot of the concerns and questions I had about this technology and Bitcoin as an asset and a currency had largely been answered or clarified. And that's when everything changed for me. And I got very excited again. And frankly, I went to my dad and said, I don't want to be such a millennial, but we got to look at Bitcoin. I feel like I'm the Tesla guy. I'm the Tesla millennial. And I'm not doing anything to help my reputation when I say I'm excited about Bitcoin.
Yeah, and it was like before
Christmas. The fundamentals were there. What I was seeing and understanding was just tremendously exciting. And it very quickly, I realized, you know, as Raul puts it, this is actually an amazing front-running opportunity for retail investors because the institutions have been largely artificially kept out for a while. And besides just my belief in the underlying technology and what it can be as a store of value. But yeah.
And you don't, like some people in your age, become, it's like a religion. They become what's called maximalist. You're not that way. Sure, it could be money, a store of value, a value that, but, and like Raul, who's a macro guy, it simply is a great trade opportunity. But you're not beholden to it like, quote unquote, a maximalist would be. I'm assuming, have you looked at others like Ether and other lesser known cryptocurrencies, which would be someone who's all in on Bitcoin as a maximalist would never do that?
No, I certainly have, but I am just starting sort of my due diligence and underwriting process on those. From what I can tell now, it's just a completely different world. What Bitcoin seems to me, the value will bring our society and our financial system is completely different than what Ether and Ethereum and some of the other coins being built up around that infrastructure will offer. They're almost completely separate asset classes, even though they're both digital assets or cryptocurrencies. So I almost feel like talking about Ethereum and Bitcoin in the same sentence isn't even really fair. I guess insofar as maybe talking about you know, almost as much as talking about Bitcoin and Tesla is. But that's sort of my perspective on it. I look forward to learning more about those. But right now, what does make sense to me is Bitcoin. And I didn't need to wait to understand necessarily the rest of the ecosystem and all the other altcoins before realizing what value there is in Bitcoin. I have been speaking for a while though, Dad, so if you want to.
Yes, I would love to, and you did great, but I would love to hear from Frohman II. So, you know, we're relatively, like I said, in the same age bracket. We probably came across this back, I mean, me, like 2011 or 12, and it seemed cool, but I just didn't get it. When did you become familiar with it, and when did you get comfortable investing?
About a month ago. and
well, it's pretty good timing.
You know, it's thanks to the very current availability of direct conversations with these leading researchers and investors. Mike Novogratz is another one that was pointed out to me as somebody to pay attention to. So, you know, if you quickly, or if you spend a few hours listening to some pretty extensive commentary by people like, you know, the CEO of the public company that's invested over $1 billion at the Treasury, then, you know, they're intelligent people. They run you through the pros and cons. You know, they tell you how they ignored Bitcoin for a while and then what changed their mind and so on and so forth. So, I mean, it's been a crash course, and for sure it takes a bunch of time and a bunch of hours. But when you feel that you've heard from a variety of sources, both bulls and bears, then, you know, maybe you're in a position to you know, make a decision to make some take some preliminary positions in an investment. So that all took place for me, you know, in a couple of weeks' time around the holidays.
But from a position of from 0 to 100, you moved pretty quick, perhaps with the help of your son. This wasn't something that you felt, let's be patient, let me put 200 or 300 hours of forming a thesis. You moved quickly. I'm assuming you might have did it with a nominal amount of money. So worst case, it went down. It's relatively not going to be too impactful.
It's, you know, the problem with being nominal about things is it's fine if, you know, it's like, oh, there's a stock that, you know, might be a pretty good stock and it might return 15 or 20% a year. But when it's something that's moving quickly and it has multiples of upside, then, you know, it's sort of like Tesla, right? If you go nominal on Tesla and you stay nominal and then you wait and you wait and you wait, well, pretty soon it gets very expensive to increase your position, right? Because the stocks, you know, Tesla's gone up 5x or 10x. And so, you know, sometimes you have to like just really focus, you have to do a bunch of research and feel that you've done enough to do something meaningful. I mean, I've made the mistake of not putting nearly enough dollars into things in the past because I was lazy and I didn't do enough work. So I wasn't convinced. So I dabbled. And dabbling is really kind of pointless to me. Like, do enough work to make a decision to do something meaningful. Now, it doesn't mean you go on the upper end of whatever a reasonable range of allocation is, but to take to put like 0.5% in something or 0.25%, it's just not going to move your needle on your portfolio.
No, if it was Bitcoin 10 years ago, it would have. But the exponential growth now, I think, is going to be somewhat more contained. So, and I want to dig into this a little deeper. Now, you are an engineer. That would help here by your training. But I'm assuming you're not going to consider yourself a master technologist about every little nuance of Bitcoin. So you made a decision with some of your engineering framework, but do you completely understand the arguments from regulatory to a ghost chain to suppose the NSA developed it in 1996 and they're tracking it? I mean, there's a lot of things out there that sometimes people that are very analytical that may have a confirmation bias, they're looking for reasons not to.
Yeah, I mean, I think I'm aware of most, if not all, of the major aspects of Bitcoin. It doesn't mean I understand exactly how the mining works, et cetera. But I think I know enough and I've listened to enough people who know a lot more than I do. That's the key, right? So it's not, I don't have the time to fly around the country and, like literally like months to do research, primary research, but I am relying and leveraging on people who've been doing this for a while and are, investing in some cases, perhaps $1 billion or billions of dollars. So I'm leveraging others' work is the way I see it.
Is it some of it's a direct ownership of Bitcoin, or is it also through hedge funds?
No, so far, and I'm intrigued by potentially funds. I haven't had the time to really research the funds because the attraction of the funds is that they'll diversify into multiple digital assets, and there may be other fantastic, investment opportunities out there, which I will not have the bandwidth or the skill to evaluate. And so I could certainly become convinced to allocate to a manager of digital assets. And that's something that I'll probably spend some time on this year. But initially it was fun to work with Frohman and just go, very narrow and focused. And we were either going to go in or out of Bitcoin, and that's what we did. So.
Yeah, I mean, for those that are relatively newer to the Bitcoin world and some great people that you mentioned, the work of Michael Saylor at MicroStrategy, Raoul Paul, who we noted, I would definitely, because she's an engineer by training like you, definitely look at the work of Lynn Alden. I also interviewed her about a month ago. She's amazing. And I would look for people, Plan B that many of you may know from Twitter, but I would look for people on the other side of the coin because sometimes they make interesting, pardon that pun, but interesting arguments that we may disagree with. But again, we all need to be mindful to be careful of confirmation bias. Do you think this year, related to that, you'll be looking at making investments? Probably it would, I guess, need to be through managers for the most part in blockchain technology.
Yeah, definitely want to look in that area. But on the other hand, there are other non-digital asset areas that I need to allocate time into that, perhaps have more of a social or environmental impact. So, it really becomes, sadly, a little bit of a trade-off of, what am I going to work on? And maybe digital assets aren't going to be number one on the list this year. And so maybe I don't get around to doing enough work and investing a lot more in digital assets. We'll see.
And Frohman the third. Okay, let's be more stereotypical. We got Bitcoin and Tesla covered. Have you looked into, or are you about to? It's become popular. There's a couple, I guess, on the Canadian Stock Exchange. And I could argue it has for sure, a positive societal impact with all the challenges of depression and mental illness. Have you looked into psychedelics?
Actually, yeah. I've spoken with a couple people who are involved more on the private equity side with some of those investments and doing some, I would say, foundational philanthropic work to progress that movement. I find it very interesting. I read Michael Pollan's book a couple of years ago about it, How to Change Your Mind. Excellent read for anybody looking to come up the learning curve on psychedelics, and I would say the leading science and a historical context of them. But no, it's a very compelling space for me. I haven't seen yet for me an easy way to engage on it, and I need to learn more before I'm going to start to allocate. But it's a space I'm very interested in, both for the mental health applications and medical applications, but frankly, also just like the betterment of well people. I think it's a pretty interesting opportunity.
And have you and your dad looked into SPACs?
A little bit. I really like to follow Chamath Palihapitiya, and I know he's the man of SPACs these days. So
yes, he is.
It's an interesting world. I think fundamentally, I don't have too many problems with them. It seems that they've been utilized in some ways that are less advantageous, or I would say less constructive. You can look at some of the electric vehicle startups like Nikola, right, who SPAC'd, and it seems like there might be a tremendous amount of fraud around that business and deception. So, skirting the traditional IPO process can have its advantages, but something to be aware of.
For sure. And Frohman II, a little bit about Everhope Foundation and your involvement in being active from a societal perspective, and the focus of you and your family around some of the things we spoke about today: climate change, sustainability. If you could talk a little bit about that, I'd love to listen.
It's a small foundation. My wife and I started about 5 years ago with a slightly different idea, which was that we were going to back social entrepreneurs. And the reality is that after a year and a half or two, and maybe we didn't put enough elbow grease in, we weren't coming up with a heck of a lot of need or opportunity per se, even though she's involved with my wife's involved with an incubator for social enterprises in Rhode Island. But we really repurposed or redirected this small foundation once my children and Frohman's wife got involved with, as we all got more knowledgeable and more connected in the world around climate change in particular, although we've forayed into other environmental areas. But within climate, there are things like litigation opportunities, certainly regulatory support, and there are a number of great organizations. Some are more specific, frankly, on the animal and protein side, which again is a climate play, one of the benefits. So, through, again, Frohman's work, we were connected with leading organizations that, are really deserving, highly impactful, moving quickly, scaling quickly. So kind of easy to underwrite grants to some of those type of organizations that are, just so effective. And so we feel, in the fact that we're all doing it together, the fact that we meet a few times a year and run through the grantees and bring new ideas and new opportunities. It's just a wonderful family activity, and we're just glad we did it. We don't know where that foundation will be in the future. We'll be like a lot bigger, or we'll be happy sort of where it's at, funding 10 to a dozen relationships. Don't want to have too many relationships. My broader family's had a foundation for like 30 years. It's quite a bit bigger and completely different focus. But we felt that it was necessary for us to be unconstrained, and so we decided to start our own small foundation.
Excellent. I do see we're a little past the top of the hour. Probably time to wrap up. So one, I'd like to thank both Frohman II and the third. This was very insightful and very helpful to our live audience, and hopefully those that will listen or watch this as well. Wish we had more time, but it's a reason to have Frohman and Frohman on again as we see how things evolve in the interesting year of 2021. Everyone, I'm Angelo Robles. I'm the host of the Angelo Robles podcast. I'm the founder and CEO at Family Office Association, a global membership organization dedicated to single family offices, providing proprietary content, hosting global programming, lots of virtual programming, and it's been wonderful interviewing amazing people and sharing it specifically with our members. Private portals and networks and other communication exclusively to our members within the family office community. So it's been wonderful. You could learn more by going to familyofficeassociation.com. My direct email is angelo@familyofficeassociation.com. And on social media, we recommend our YouTube channel, which very simply is Family Office. Go and subscribe. On that note, again, Frohman and Frohman, thank you so much.